Okay, welcome to the topic class on internal controls. So, internal controls, we are focusing today on a thing called SoD, or segregation of duties. So if you ever see SoD, that is just segregation of duties. Which is a part of this topic of internal controls. Now, internal controls is everything that relates to the processes or policies that a business has to safeguard the assets and to prevent fraud or theft or errors. So it's everything that they do internally to make sure everything works right. Okay, so internal controls, trying to prevent fraud or theft, things like that. Now, segregation of duties is just one of those, and that's what we're going to focus on. If you look on Canvas, I've put a bit more extra information on about internal controls and the 5 different processes and some extra bits. So I would highly encourage you to go in there. But segregation of duties is one of the most common internal controls we can use. Internal control, called segregation of duties, is having more than one person involved or required to complete a certain task. So when you think about a task that has to be done, you want to involve as many people as you can. So in a perfect system, no one person should be responsible for that one transaction. So it's all looking at breaking up the transactions. Breaking up the transactions, so you've got in your PowerPoint, some people do the authorization part. You have to think about the custody part. What safeguards of the actual product do you have on hand? How about the record keeping, the accounting team, are they separate? How about the payment? And reconciliation, the payment of it and actually checking the final check of the employees. So, got an example of the PowerPoint. If the same employee oversaw ordering the wine or beer, then they received the wine or beer, and then they made the payment for the wine or beer, there's nothing stopping them for actually ordering it for home use, arranging it to be delivered home, and then authorising the payment. So you have to have checks in place to make sure that that doesn't happen. So you have to put yourself into the shoes of a employee who might think they want to defraud the hotel. So think about your hotel IP placement. Did this ever happen? Was there a bit of fraud, theft that happened by employees? And how or what process or policy could you put in place that will stop it? Okay, a couple more examples. Cash is another example. A cashier responsible for taking money from guests should not then be responsible for doing the daily banking. So who should do the daily banking tally up? Who should take it to the bank? What extra processes can you put into place? And again, if an employee has the custody just means holding something of an asset, maybe a vehicle or a computer, they're unlikely to take that asset if they know someone else is going to check up on them as well. So, segregation of duties in 3 main areas. Firstly, revenue, which is mostly focusing on cash received, because cash is a big one. Second one is looking at purchases, purchasing of items, and authorising those purchases. And finally, payroll. So, in the PowerPoint, we'll do the first one. Internal controls for cash. So, cash is highly susceptible to theft. Sometimes, we get sales in by cash. So making sure that we have those processes to make sure that we record the cash received. And it could be as simple as, the till, actually printing out the dockets to say how much cash has been received, making sure everything's run through the till. Segregate the cash handling jobs. One person receives it, one person does a check, one person deposits it, another person maintains the banking records. Daily banking, if possible, that would be a good thing. And not making any cash payments to people. Not so much of a problem now because of internet banking and electronic payments, such as credit cards and mobile EFTPOS. But a few years ago, big problems with just people paying out of the till and not knowing. So we've got a bit of a scenario, you just started managing a hotel. What processes would you put in place for the cash received by customers through a bar? Do it step by step. Think about, okay, what would be in place to make sure all the cash gets received, all the cash ends up in the bank, and nothing ends up in the employee's pocket. You can also think about other factors you can put into place, security, other things like that as well. Okay, second part, we've got purchases. So you need some policies or checks to make sure the right orders happen and to prevent double ordering from happening. You need to put who's responsible for what. So maybe the chefs order the food, housekeeping orders the products, but you need to think about who authorises it, then who receives the product, who checks it off when the delivery docket comes, who pays for it, and ideally they should be 3 different people. There's some forms that are sometimes used, requisition form if you're applying for wanting a product, a purchase order form if you need to go buy a product, the delivery note or receiving report, and then finally the supplier's invoice. What can be really handy is that these are all grouped together at the end, and that's called the reconciliation, making sure that what was paid for, what was received, was actually what we ordered in that time as well. So that's the double check at the end as well. But having different people involved in each of these products. So another scenario that's there, just started managing a hotel. What processes would you put into place for purchases done by the restaurant through the year? And again, step by step, who would be involved? Finally, we come to the third one called payroll. So, payroll is the single largest expense. Purchases of food is also a big expense, but there's a lot of people involved. You should have more than one person involved in the process. So, ideally, you've got individual employment agreements and setting of wage rates, verifying hours worked, preparing the payroll, authorising the payment, and reconciling it. Having different people involved in these processes can help. If you don't, then you can actually get what's called ghost employees. And so ghost employees, it is employees that don't exist. So if a payroll person wanted to rip off the system and had enough control and there wasn't someone else checking who was there, they could create employees that don't exist and have their wages paid to another bank account that they control. This has happened quite a lot, unfortunately, ghost employees being created. So question in the PowerPoint. What processes could you put in place to prevent ghost employees? What could you do to prevent that from even happening? Second question, which is an interesting one. What processes could you put in place to ensure that the staff record their time accurately? So, what sort of time sheeting would they use? Who authorises it? What could we put into place to make sure that your payroll expense is correct? Okay, last little slide on the PowerPoint is just some other internal controls. Now, as I said, segregation of duties is only one internal control. There are many more that you can put into place. So you can set authorisation limits, double authorisation on payments, doing bank reconciliations, making sure we have the right amount in the bank. Checking of fixed assets, checking what's there is what's correct. Having policies about hotels use, and doing stock takes of inventory, making sure that the inventory level that should be there is actually there and hasn't walked away. So all of those controls help detect if there's unauthorised payments or if there's assets missing. So yeah, some really interesting things. And when you're actually a manager of a firm, of a hotel, these are really important issues to think about how to stop assets from sort of going and being misplaced. So there's a couple of activities you can do in your workbook and Canvas related to some different hotels. Try and identify what internal controls they do have and sort of what internal controls could they be introduced. Okay, thank you very much.